Greetings from Hires and Associates. We are a fully independent insurance agency specializing in Medicare supplement insurance plans. And in this brief but informative presentation, we are going to specifically discuss Plan G, compare it to other popular Medicare supplement plans like F and N, and discuss why it might be a good choice to supplement your Medicare coverage. Let's take a look at the most popular Medicare supplement plans sold today, Plans F, G, and N. Plan F has long been considered the Cadillac of all Medicare supplements. If you have a Medicare approved expense, Plan F is going to fill in all the gaps. You will have no deductibles, no coinsurance, no excess charges, and you have no office copays to worry about. Now Plan G is just one small notch below Plan F. The only difference is that Plan G does not cover the Part B deductible. That's it. In every other way, it's exactly like Plan F, which we already know is the Cadillac plan. Plan N is just a couple of notches below Plan G. Does not cover the Part B deductible and does not cover Part B excess charges, although Part B excess charges aren't often encountered. The only other difference with Plan N is it has a $20 copay maximum when you see a primary care physician or a specialist, and a $50 copay if you go to the ER. Plans G and N have no copays. So these plans are all very similar, but the question is, where can you extract the most value from your Medicare supplement? So why is Plan G sometimes a better value than Plan F? Well, we now know the only difference between Plan G and F is the Part B deductible. The Part B deductible is a very small amount. For 2017, it's $183. It's been $183 or less since inception. But Plan G premiums usually cost less than the overall deductible. In other words, Plan G is usually about $25 a month less than Plan F. So why would you spend $25 a month to cover a $183 one-time annual deductible? Well, the answer is you probably wouldn't. The math does not add up. And again, this is a one-time deductible. Once it's met for the entire year. So if you've met your deductible with Plan G, then you have a Plan F. But you may have saved yourself somewhere in the neighborhood of $50 to $100 in premiums. So it's a good choice in that regard. Here's where we get into the wonky details a little bit. Plan G is not a guarantee issue plan. Plan F is a guarantee issue plan. This simply means it's a little bit easier to get into Plan F than it is to Plan G. So more people own Plan F. With more people in Plan F, it tends to be a little bit of a sicker population, unfortunately. With a sicker population in Plan F, because it's easier to get into, the rates increase more quickly. What about Plan G? Plan G is not a guarantee issue supplement. It's a little bit harder to get into for some folks. Less people own Plan G because of that. Since less people own it, there tends to be a healthier pool of people in Plan G. And with a healthier pool of people, the rates increase more slowly. That is the most important factor. So when we're looking at these plans, we're also shopping for the future. We want a plan with lower rate increases. At our agency, we get rate increases across our desk all the time. And we'll see Plan F increases in the neighborhood of 8 to 10%. We'll see Plan G increases in the neighborhood of 4 to 6%. And that's what we're looking for, rate stability now and rate stability, most importantly, in the future. And there's more to think about in the future of Medicare. Congress said in January of 2020, those who are new to Medicare cannot purchase a plan that covers the Part B deductible. This is going to include Plans F, C, and high deductible F. So Plan F will be off the market for Medicare beneficiaries who are new to Medicare in 2020. Now, if you already have a Plan F Medicare supplement, you can keep it. But no new people will be coming in 2020, so the pool is going to trend older and perhaps unhealthier. And that's what we're trying to avoid. That's what we discussed in the last slide. If the pool is trending older and perhaps unhealthier, the rates are going to go up even more quickly overall. So when we look out to the future, we think to ourselves, well, maybe Plans G and N will be more stable in their rate increases in that they will be accepting newer, younger, and perhaps healthier people. So that's another factor that's working against Plan F that we don't have to worry about with Plans G and N. A question we're often asked by many of our prospective clients is, what if the Centers for Medicare and Medicaid Services, CMS, raises the Part B deductible? Well, the first thing to know is once they raise it, it affects all policyholders, both old and new. But we know that Plan G does not cover the Part B deductible. So if they raised it from 180 to 190 to 200, Plan G is not going to cover that, so that you don't have to worry about that affecting your rates that much. But Plan F does cover the Part B deductible. And Plan F is just going to pass that cost along to you. They will not absorb the cost. So these Medicare and insurance companies, they're not in the business of losing money. So if it goes from $180 to $280 over time, you're just going to see your Plan F rates go up accordingly. So one way or the other, you're paying for it. You're either paying for it in the way of premiums, or you're paying for it out of your pocket. Some of our clients prefer Plan G in that it's the good value that we discussed earlier, but they're in control of the deductible. They don't have to pay for it in terms of higher premiums. Now let's just talk about Medicare supplements overall. When you're shopping for Medicare supplements, you're almost definitely shopping for premium stability. Almost all Medicare supplements are created equal. A Plan G is a Plan G is a Plan G. The networks don't differ. You can go and see any doctor or hospital that accepts Medicare. Medicare is your network, not your Medicare supplement. Your supplement just piggybacks off of Medicare and follows it around and shadows it like a little brother. So you don't have to worry that Plan F has a different network than Plan G, or Mutual of Omaha has a different network than Aetna or United Healthcare. Again, your network is Medicare. So you want a supplement that fills in most, if not all, of the gaps covered by Medicare. Plans F, G, and N do that, but again, G can be a little bit better value. But in our opinion, you are shopping most importantly for premium stability. So if we have an F plan that's going up by 8 or 10% each year, and a G plan that's going up by 4 or 6%, or even an N plan that's going up by 4 or 6%, that's important, because in most states there's no open enrollment for Medicare supplements. Once you get into a Medicare supplement, if you have poor health, it can be difficult to find a new one. So if the Plan F rate is going up dramatically, you can get stuck there. If the G rates or the N rates are going up more slowly, you're going to be happier overall. So let's put it all together in our final analysis. First of all, we know that we've got lower premiums with Plan G. And we know that those lower premiums more than make up for the deductible. If we're spending $25 less a month, that more than makes up for a $180 deductible. Plan G is not a guarantee issue Medicare supplement. We like that as well. Simply said, Plan F is a little bit easier to get into. Now, if you're in open enrollment, you can purchase any plan that you want, F, G, or N. But there's a lot of guarantee issue windows for folks. Maybe someone's moving from one state to another, coming out of a Medicare Advantage plan, something like that, and they might be very sick, and they can get a Plan F. Well, with those folks in the Plan F, and they might be sicker, the rates go up more quickly. Because of that, Plan G tends to have lower rate increases, and we like that. We also know that Medicare is definitely changing in 2020, and Plan F is going away for new enrollees. Now again, if you have your Plan F, you can keep it, and if you have your Plan F, you can even shop for new Plan Fs. But folks that are turning 65 in 2020 will not be able to purchase a Plan F or a C or a high deductible F, and again, that means that pool might trend unhealthier and older. So overall, Plan G offers good value and can be a good choice. It just simply can be more stable than Plan F over time. So that wraps up our presentation about Plan G and why it can be a good choice. We're Hires and Associates. We're an independent insurance agency. We specialize in Medicare supplements, Advantage plans, drug plans, Part D, so forth. We've been doing this for a long time, so we typically know what we're talking about. We work in several different states. We're licensed with all types of carriers. We're licensed with all of them direct. So if you want to compare the direct rates with several Medicare supplement providers, whether it's Plan F, G, N, or another, just give us a call or visit our website, and we will be happy to help you out. Thanks for watching, and we hope this helps.